In this example, we are going to be doing practice exercise 15-2A that can be found in your textbook on page 694. We're going to be journalizing stock investment transactions. The exercise tells us that on March 20th, 10,000 shares of Thorlite Company are acquired at a price of $30 per share plus a $250 brokerage fee. On May 30th, a 25-cent per share dividend was received on the Thorlite Company stock. On June 15th, 5,000 shares of the Thorlite Company stock were sold for $36 per share, less a $200 brokerage fee. And we need to prepare the journal entries for the original purchase, the dividend, and the sale under the cost method. Since we're only buying 10,000 shares, we can assume in this case that we are going to be following the cost method to record these equity transactions because we do not have a significant influence over Thorlite Company. So we need to first journalize the entry for March 20th. Again, they tell us that we're buying 10,000 shares of Thorlite Company at $30 per share plus a $250 brokerage fee. When we are acquiring any investment, we have to record it at the full value of what we paid for it. So again, we are buying 10,000 shares. Each one of those shares is costing us $30 per share. However, we also had to pay a $250 brokerage fee, so we need to include that as well. We have our 10,000 shares times $30 per share. So far, we've spent $300,000. But we also have to add to that the $250 brokerage fee that we paid in order to buy these investments. So our total value of our investment is $300,250. So, journalize. We have our investment in Thorlite Company stock for a total of $300,250. And we purchased it with cash. On May 30th, we're going to receive a dividend of 25 cents per share. We have 10,000 shares, and we're going to receive 25 cents per share in a dividend. Again, we do not have significant influence over this business, so we can just record the $2,500 that we're receiving as dividend revenue. So on May 30th, again, we're the investor, so we are receiving the cash of the $2,500. And since we do not have significant influence over this business, we record it as dividend revenue, which will be directly put to our income statement. And finally, on June 15th, we are going to sell some of our shares of Thorlite Company stock. They tell us that we're going to sell 5,000 shares of the stock for $36 per share, less a $200 brokerage fee. So first, let's figure out how much cash will be received for this sale. So we are selling 5,000 shares. We're selling them for $36 per share. However, we have to pay a $200 brokerage fee in order to make the sale. So again, we take the 500,000 shares that we're selling and multiply it by the price per share that we're selling them for. And then we subtract away the $200 that we have to pay in the brokerage fee. So, in total, we will be receiving $179,800. What we're selling is some of our investment. Remember, whatever your investment goes on your books for, it has to come off at that same rate. So we need to calculate how much of our investment will be removed. We know that when we purchased these shares that we paid $30 per share. However, we didn't just pay $30 per share. We also paid $250 in a brokerage fee that we included in that investment account. So we have to figure out really how much per share we spent. And we do that by taking the total amount of our initial investment, the $300,250, and dividing it by how many shares that initially bought us. And again, in the beginning, we bought 10,000 shares. So in fact, it had really cost us $30.03 per share. We have to take off each share at $30.03 a piece, because if we only take it off for the $30, we would have an investment account left of $250 after we sold all of our shares. So if we're going to sell 5,000 shares, we have to remove them at $30.03 per share, or $150,125. The final piece we need to calculate is either the gain or the loss on our sale of our investment. And when we do that, we're going to need to compare the cash that we are going to receive versus how much we had paid for that investment. So in this case, we're going to receive $179,800, and we had paid $150,125 for that investment, meaning we have a positive amount, or a gain on our sale, of $29,675. So now that we have our calculations, we can journalize. We're going to receive cash. Again, the cash that we're going to receive is a total of $179,800. We are selling our investment in Thorlite Company stock. We're not selling all of it, but we are selling half. And that half accounts for $150,125. And we have a gain on the sale of our investment because we sold it for more than we had paid for it, in total of $29,675.